Let's talk real estate in an election year, shall we? What do we traditionally see in an election year with real estate transactions? We typically see that there are 15% fewer transactions in November during an election year. What have we seen so far? We've seen an uptick in transactions in our marketplace. More homes are pending, more homes are under contract, and at a higher percentage, a higher price than they were this time last year. What does it say about our marketplace? I don't know. One thing we do know is that there's a lot of volatility in our marketplace. Over the last 5 months, prices have gone up and down and up and down and fluctuated. So what we can expect when election results come in is probably much of the same. We're probably going to see some fluctuations in the marketplace. We're going to see some more resiliency. We're going to see a little bit of change. And what we're going to see is that whoever wins, whether it's the left or the right, the people on the left, if they win, are going to be really excited. People on the right, if they win, are going to be really excited and are going to go out there and make major decisions. They're going to do stuff like buy homes. They're going to think that things are going to be a lot better. Inflation is going to go down. Jobs are going to be better. Groceries are going to be cheaper. And so what we're going to have is 40% of the population excited, 40% not. What does that do? It kind of cancels itself out. So my prediction post-election is that things are going to be relatively the same. Now, the outlier to that could be that the Fed meets the day after the election, and they're expecting the odds makers out there, those that are kind of bet on what the market is going to do and what the Fed is going to do, are predicting that the Fed on November 7th is going to lower the Fed funds rate by 0.25%. What does that say for mortgage rates? Well, typically nothing. Maybe very little, maybe some. So what happens is when the Fed adjusts their rate, the mortgage rate is not directly affected, but it sends a signal to the marketplace. And it's often coupled with other data that the marketplace will read. And potentially, those who invest in mortgages will see it as a good sign or a bad sign, and the rate will go down or up. But there's no direct connection to the Fed funds rate and mortgage interest rates. So what can we expect? We can expect people to do what they want. We can expect buyers to buy when they want, sellers to sell when they want, to continue life as normal. And post-election, hopefully what we'll see is a little bit of a collective sigh from the population as we slough off what has been a very difficult and mindset-consuming election cycle. So after the election, if you have questions, if you've decided it's time for you to move, it's time for you to sell, it's time for you to buy, please feel free to call me. I'll fill you in on the latest set of statistics, what I'm seeing and feeling in the marketplace, and we can set a strategy that's right for you. I can be reached at 602-595-4200. Thanks for watching.